Welcome back to the Dividend Diplomats YouTube channel. You got Bert the Herd over here, and you know you're rolling with Lanny, the Dividend Diplomats, and we're here to talk to you about 3 undervalued dividend growth stocks as we head into December, baby.
That's absolutely right, Lanny. But before we do, everyone, please subscribe to our channel. Give us a nice thumbs up on this video. Help us continue spreading the news about dividend investing, dividend growth stocks, and reaching financial freedom. So Lanny, we're pumped up here. I know last week we put out another watch list too. The journey to find undervalued dividend stocks never ends. Just because we put out a video with 3 last week doesn't mean there aren't other undervalued stocks out there. So thank you for putting some research together and finding 3 of your own to keep watching.
I put the pen to paper, and I was writing my Christmas wish list to good old Santa dividend. And you know, I found 3 dividend stocks to put on my wish list for the holidays this year. And you know, the S&P 500 again is still doing very well.
Even though we had a sell-off that happened because of the new COVID variant that was found, where yeah, the market dropped 2% on Black Friday. So there were some great stocks, a lot of action on Twitter talking about buying your Black Friday sales of dividend stocks. But what's funny is when you take a step back, you zoom out and see the stock market's still crushing it over the long run this year.
Still cruising over 4,600, still trading at 29 times earnings. But we're dividend investors. We're here to add dividend income as the main and possibly best source of passive income. It's true. It's damn true.
You're absolutely right, Lanny, though. We love that dividend income. We love sleeping and waking up the next morning and seeing those dividends hit your brokerage account. And then we love just when you get out of nowhere, hey, one of your stocks just increased their dividend. So just like that, without doing anything, your income grows. That is why dividend investing is the best.
It's all about growing income, adding income, reaching financial freedom. So we got 3 dividend stocks here. You know, I always put out a list going into the next month, and this is 3 dividend stocks to buy right now that I'm referring to. And I've been buying at least 2 out of the 3 almost consistently throughout the year of 2021. And if you caught my blog article, I've been buying this stock weekly as well. And as you'll see in our purchase videos, I've also been nibbling again at this pharmaceutical stock.
As well as I have too, so it's been great. But before we dive into it, let's just talk through quickly the Dividend Diplomats Dividend Stock Screener. We have 3 simple metrics and a bonus metric that we use to research every undervalued dividend stock we are looking to potentially buy or add to our watch list. Those 3 metrics include price to earnings ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends where we look at the 5-year average dividend growth rate, and how long a company has been increasing its dividend. And that bonus metric, when you pass the first 3, is the dividend yield.
There it is. That's the Dividend Diplomat Stock Screener. We're going to dive into dividend stock number 1, and it's a stock that I've been buying weekly. We've showcased here one of the best real estate investment trusts or REITs out there. They persevered through the pandemic, didn't cut their dividend. They've been increasing their dividend each year since they've been public. The Oracle of Omaha, Warren Buffett owns stock as well in this company.
Gotta love it as a dividend investor.
Gotta love it.
If Warren puts his stamp on it, then you know it's good.
If Warren Buffett's buying, we bought it first. No, I'm kidding, but
there have been a few. Walgreens, right?
Walgreens, well, Verizon, quite a few others.
Yeah, that's right.
We are talking STOR Capital. Ticker symbol is STOR. Keeping it simple. We're going to the store to buy STOR. This dividend stock has been discounted, I feel, lately. And again, when we look at a REIT, we look at adjusted funds from operations instead of EPS when we calculate the price to earnings ratio or the price to AFFO in order to properly value this REIT. And again, as a REIT, they're required to pay 90% of their earnings back to the shareholders or partners. And that's why you'll see either high dividends or high payout ratios.
Yeah, swapping in AFFO for EPS is clutch for REITs because that is the industry standard, because you're adding back some of those non-cash expenses in there from EPS that you're required for GAAP earnings to report for SEC financial reporting. But you can also add back in depreciation because real estate has a lot of depreciation, so it's part of the business.
There is. Business is business.
All right, so let's jump right in. The stock prices we're going to have our as of Black Friday here, which was November 26th. Store closed at $33.11, and their AFFO adjusted for this was $1.94. Gives you a price to FFO ratio of 17.07.
So not the cheapest, but not the most overvalued for store capital. And the way we used their AFFO was taking their 6 months performance and then just annualizing that out. You know, again, store capital is a beast in the industry. I think they're a great complement to Realty Income. And they just spun off. I know they're big.
Yeah.
Nice, lovely spin-off that everybody's excited about.
Commercial operations are now its own entity there for the combined Realty Income. It'll be interesting.
Yeah. So now going into that second dividend stock metric, the dividend payout ratio. They currently pay an annual dividend of $1.54, obviously spread throughout 4 quarters of, I believe it's 38.5 cents. And you take that over the $1.94 AFFO, so you got a nice payout ratio of 79%, which seems high, but that's actually kind of on the lower territory for a REIT.
Yeah, I like that because for REITs, which are required, as Laney said earlier, to pay out a high percentage of your income, you're always going to have a higher payout ratio. So they still have 20% to go before they hit 100%, which is huge for a REIT. So that's excellent in my mind.
So Bert, it's all about dividend growth, raising your dividend income, which increases your passive income. How has Store been doing it?
All right, their 5-year dividend growth rate is 5.91%, and they've increased that dividend for 6+ years. And to your point, they increased it through the pandemic there. They still found a way to increase it during the toughest time for retail and real estate investment trusts that hold those retail companies. So excellent, great stuff.
What's been nice is the stock price in Store has kind of stayed in this $33 to $35 range, which kind of helps us, look at the dividend yield. The dividend yield has been fairly consistent. Right now it's 4.65% as the bonus metric. And it's really because they've been a pretty flat stock price company over the last year.
Yeah, and I like that yield and that dividend growth rate there.
Combo.
One of the important things when you're looking at REITs is not to chase that dividend yield. You don't have to invest in a REIT that will earn you 9%, 10%. There are plenty of them out there that may not have the safest of dividends when you start peeling back the financials and running them through the screener. There's some that are safe, but especially if one like Store, you can still get a bang for your buck with a 4.65% yield and exposure to real estate. It's great.
I think secretly TLC, when they were making Don't Go Chasing Waterfalls, I think they were saying Don't Go Chasing Dividend Yield.
All right, well, let's summarize Store here before on that note. Their price to FFO ratio, 17.07, payout ratio, 79%. 5-year dividend growth rate, 5.91%. They've increased that dividend for 6 years, and they have a yield of 4.65%.
There it is, well above the S&P 500, well above Realty Income.
Yeah.
So let's go into that second dividend stock, another dividend stock to buy as you head into December. We're talking the cash flow and the cash cowing Viatris, ticker symbol VTRS. And Bert, what brands does this company have under the hood? Name one or two of them.
Let's see. They've got. I'm trying to do this from memory here. I always screw this up. Yeah, Viagra. Is it?
Lipitor.
Yeah, Lipitor. Man, my memory is off today.
They have a few big cash flowing brands.
Just put the picture up, Lanny.
Yeah. A lot of brands. They came from the joint venture / spin-off with Pfizer and Mylan, with Pfizer's Upjohn business, creating this big conglomerate, old school, pharmaceutical company here. And they had a great last quarter earnings.
Yeah, it crushed it. I mean, they absolutely crushed it. You're going to see it when we start going through the metrics here of why they're on there. You're seeing the cash flow coming. They're even building a new pipeline here for some of their drugs, and you're starting to see some earnings coming through that, which is exciting because when you spun off a bunch of legacy brands, the concern is what's going to happen when those pills become generic and people can take out the competition there.
Pills.
Yeah, so what's going to happen with Viatris and those legacy ones? Oh wait, they're building a new pipeline here of other brands in there. It's excellent stuff.
Yep, so the stock price as of November 26th was only $12.75.
It keeps falling, yeah.
Yep,
I bought them last week at like $13.15-ish, $13.18. So yeah, they're now below 12 more. Yeah, we'll keep adding them, right?
Go get in.
Heck yeah. That's what I am talking about. Let's keep going. All right, first metric here while we're feeling it. Their price, $12.75. Their forward EPS, $3.72. You are going to hear this correctly. Their PE ratio is 3.43. 3.
Yeah, you can even fourth their EPS. You know, you can even be uber conservative, but either which way, analysts are bullish on Viatris. We're both bullish on Viatris. That's why. Sorry, guys, we had a little snafu with saving the recording midway through the video. So you are now seeing us hit this late night. It's almost 9 o'clock here, Saturday, November 27th. We're in the middle of talking about Viatris, VTRS. Just talked about the price to earnings ratio. So we're getting into that second dividend stock screening metric that we like to use, and that's the dividend payout ratio. You know, currently with Viatris paying 11 cents per quarter or 44 cents per year. Over that, you know, again, bullish earnings per share from the analyst of $3.72. That equates out to a payout ratio of a small, dismal 11.83% for Viatris, Bert.
Yeah, that's fantastic. I mean, that's nothing. They have plenty of room to keep growing that dividend. And I mean, it's going to be exciting to see come February what's going to happen when they get set to announce that increase for the first time. There's plenty of room to grow that dividend based on their current projected earnings.
Double it, Viatris, double it.
Triple it. Let's go, Viatris. All right, so that third metric, this one's going to be interesting. Obviously, Viatris, they've just announced one dividend, so they don't have a recent history. But if you want to take a quick look back at Pfizer, the company that they were spun off from, Pfizer's increased that dividend every year since the financial crisis. Prior to the financial crisis, management also had a history of raising and increasing that dividend too. So coming from the Pfizer coaching tree, as you would call it in the football world, when Viatris' management team is on their own, chances are they're going to work about and develop a strategy to increase that dividend going forward.
There you have it. Now, Viatris right now, again, for that bonus metric, that dividend yield, paying 44 cents, you know, dividing that over the small share price of only $12.75 right now. Their yield is actually 3.45%, more than double the S&P 500, higher than Pfizer, not higher than AbbVie, but definitely high amongst the pharmaceuticals.
Yep, so let's summarize Viatris here. You're going to easily see why when he has them on his watch list. PE ratio, 3.4, payout ratio, nothing, 11.83%. All right, it's something, just not a lot. They haven't increased their dividend, but they came from Pfizer, who has a long-term history of increasing that dividend, and their yield is a juicy 3.45%. Again, Lanny, I get it. I see why. That's why I've been adding them, but I get it why you are going to continue watching Viatris, especially under 13 a share.
Bert, you and me, let's add in another
let's
few.
Go.
Okay, let's do it.
Let's go, Lanny. All right, number 3, Lanny. Oh, man, number three on this list. The viewers are going to be pumped up to see this third dividend stock on your watch list.
Not just an undervalued dividend stock to buy right now. This could be a great stock if you're a beginner investor. Again, when you're beginning your investing journey, you do look for dividend aristocrats, and that's what this dividend stock represents. A dividend aristocrat is on the dividend stocks to buy list here. It's one of Bert's favorites, also one of my favorites, but Bert definitely loves the invitation here, and I know he's been stacking insurance companies. Bert, who is this third company?
Aflac, ticker symbol AFL. Let's go.
Not to be confused with XFL, as Bert and I have been joking.
Yeah, let's hope Aflac Aflac this year alone has increased its dividend longer than the XFL was in existence because it didn't even make it a quarter. Bad.
Yeah, what Bert's bringing up is that Aflac came out with a nice, surprising 21% dividend increase. So we'll get into the dividend growth here in a little bit. But at the close of November 26th, Aflac was trading just above $55 at $55.57. Again, down a little bit from their highs, but they're actually a very strong performing stock year to date at over 25+%. But if we get into that first dividend diplomat stock screening metric, that price to earnings ratio, analysts are again very aggressive at $5.27 in earnings. Based on that share price, Aflac's PE ratio is barely 10.
Barely. Yeah, that's insane. I mean,
barely.
No, I'm kidding. All right, so metric number 2 here, that payout ratio. After that mighty 21% increase, their annual dividend is $1.60. Divide that Man, that EPS of $5.27 is just insane. That gives you a payout ratio of 30.36%. It's not even a perfect payout ratio, and it's a phenomenal one. Yeah, so much room to keep growing that dividend. And that's after they announced a 21% increase, everybody. Their payout ratio is only 30% after growing that dividend 21%. Insanity.
My guess is they can keep having a strong dividend growth rate in the future, which goes into that third dividend stock metric, that dividend growth rate. First, Aflac's been increasing their dividend, not just for 25 plus years being an aristocrat, but 39 plus years at an average dividend growth rate over the last 5 years of 10%. The last one again being 21%. Tell me, everybody in the comments, let me know, A, did you receive that Aflac dividend increase? Or B, did your employer give you a 21% raise this year? Let us know.
There's no way, Lanny. There's no way. But in all seriousness, let's talk about that bonus metric, the dividend yield. That annual dividend 160 divided by that share price of 55.57. That gives you a yield of 2.88%. Man, they're closing in on 3% yield. Love it.
Wow, I love it. And again, to kind of summarize where Aflac stands, again, you have a price to earnings ratio at just over 10. I mean, it's just weird saying that. And then you thought Viatris was weird at barely at, under 4, but Aflac, an aristocrat, a legacy company at 10, a dividend payout ratio at 30%, an average dividend growth rate of 10%, plus a yield of almost 3% for Aflac. Looks good. It's a great dividend stock to buy right now.
Yeah. So, all right, let me summarize the other two here just to bring it home since you just went through Aflac's metrics. Stores price to FFO ratio 17, payout ratio 79%, 5-year dividend growth rate 5.91%, and they've increased that dividend for 6 years, and they have a yield of 4.65%. Viatris PE ratio, as you said, 3.43, still insanely low to read. Payout ratio 11.83%. Working on it, that history of increasing its dividend. We'll find out what the first one is come Q1 2022, and their dividend yield is 3.45%.
There you have it. And, hopefully it comes Q1, it becomes Q2, and I think we'll be just fine waiting for that dividend increase from Viatris. But that was 3 dividend stocks to buy. Obviously, one on the list being Aflac is a great stock for beginner investors. Just starting out on their investment journey to financial freedom, hopefully. But Bert, these are 3 solid dividend stocks.
You want to quickly rank them for us in terms of where your eyes are looking from this list?
My eyes are looking and they're liking. No, but the rank of the dividend stocks here, it's almost the order that they're in. Store capital. I want to keep building up my position. I'm at 75 solid shares. Everybody knows my goal is to get to 100. So I'm going to keep biting at least a couple of shares per week, especially if they're under 35, getting more of that real estate exposure. Bert and his wife do Fundrise. My wife and I, we do Fundrise, but this is just another way to get that real estate exposure without owning actual property. Then it goes into Viatris. Again, I think the share price being this low, their stock price has been punished, over 30% year to date. You hate to throw good money at bad money, but this company's got such iconic brands and a good cash flow machine right now that, I don't know why it is still trading this low. And then obviously there's Aflac. I know personally I would love Aflac at that 3% yield, which would just calculate out to just under $54 per share.
Yeah, I mean, I think that's a fantastic order, but honestly, you could have said any order on there. They're all 3 great companies. So,
what about you, Joe?
I mean, I had my watch list from last week that I'm still looking at from this list, Viatris and Aflac. I don't know if I'd, at this moment, want to open up another position in my portfolio unless I'm prepared to go to 100 shares or something like what you're doing there. So not quite there for store. So I'm going to keep focusing on growing and building the positions that I already own, which would eliminate it down to Viatris and Aflac. But everybody, what are you watching? What would you say out of these first 3? Let us know your thoughts on Lanny's December watch list here. And obviously, if you haven't already, please subscribe to our channel. Give that video a thumbs up. We appreciate all the support, everybody. So again, thank you, thank you, thank you.
Guys, that was Bert the Herd. This was Lanny talking to you about dividend stocks to buy right now, dividend stocks to buy heading into December. Please, again, we appreciate your love and support. That was Bert, and this was Lanny from the Dividend Diplomats. Over and out.